In the fast-paced world of cryptocurrency trading, various strategies cater to different risk appetites and trading styles. One such strategy is scalping, which involves making small, frequent trades to profit from minor price fluctuations. This method is particularly suited for traders who prefer short-term gains over long-term holding and have the time to actively monitor the market. What is scalping? Scalping is a high-frequency trading strategy where traders enter and exit positions within minutes or even seconds, capitalizing on small price movements. Unlike long-term investing strategies like hodling, scalping requires constant market observation and quick decision-making. Traders often use technical analysis, market depth, and trading bots to execute trades efficiently. Why choose the scalping strategy? Quick profit scalping allows traders to accumulate small gains quickly, which can add up to significant profits over time. Lower exposure to market risk since scalpers hold positions for very short periods. They are less affected by broader market downturns compared to long-term investors. Leverages market liquidity. Scalping works best in highly liquid markets, where price spreads are tight, ensuring smooth entry and exit. Less dependency on fundamental analysis. Unlike long-term investors, scalpers rely mainly on technical indicators and price action rather than company fundamentals or news. Potential for automation. Scalping strategies can be automated using trading bots, reducing the need for manual intervention and allowing for high-frequency execution. Best cryptocurrencies for scalping. Scalping requires assets with high liquidity and trading volume. Some of the best cryptocurrencies for scalping include Bitcoin, BTC. High liquidity and stable trading pairs make it ideal for scalping. Ethereum, ETH, offers fast transactions and is actively traded. Binance Coin, BNB, a popular choice for scalping on the Binance exchange. Solana, SOL, known for its fast transaction speed and low fees. XRP, highly liquid with frequent price movements. Scalping best practices. Use reliable trading platforms. Choose platforms with low fees, fast execution, and high liquidity, such as Binance, Bybit, or Kraken. Leverage technical indicators. Utilize tools like moving averages, RSI, Bollinger Bands, and MACD for precise trade entries and exits. Set stop-loss and take-profit levels. Define clear risk management rules to avoid significant losses. Maintain a high win rate. Since profits per trade are small, maintaining a high percentage of winning trades is crucial. Avoid high volatility events. Major news announcements can lead to unpredictable price swings, making scalping riskier. Use leverage cautiously. While leverage can amplify profits, it also increases risk exposure, making disciplined risk management essential. Employ multiple timeframe analysis. Observing different timeframes helps in identifying trends and confirming trade signals, improving trade accuracy. Tools and resources for scalping. Successful scalping relies on using the right tools and resources, including trading bots, automate trades for speed and efficiency, e.g., Tree-Commerce, Pionex, Bitsgap. Technical analysis platforms, charting tools like TradingView and Coinigy help analyze price trends. Order book analysis, monitoring market depth to identify buy and sell pressure. News aggregators, keeping track of market-moving news via CoinMarketCap or CryptoPanic. Risks of scalping. While scalping offers quick profits, it is not without risks. High transaction costs. Frequent trading incurs higher fees that can eat into profits. Emotional stress. Scalping requires intense focus and discipline, which can be mentally exhausting. Market manipulation. Price manipulation by large traders can disrupt small gains. Slippage, delays in trade execution, can result in less favorable prices. Risk of overtrading, engaging in excessive trades, may lead to losses and poor decision-making. Conclusion: scalping is an effective strategy for traders looking to profit from minor price movements in the crypto market. By choosing the right assets, leveraging technical indicators, and managing risk effectively, scalpers can achieve consistent gains. However, this strategy demands dedication, quick decision-making, and a solid understanding of market trends. Whether you are a beginner or an experienced trader, mastering scalping can be a valuable addition to your trading arsenal. Additionally, using automation tools, proper risk management, and disciplined trading practices can further enhance profitability and success in scalping.